The committee said in a statement read by Governor Buah Saidy that its decision was influenced by the slow recovery of the global economy caused by heightened trade fragmentation, rising debt vulnerabilities, and climate-related supply corruption. The Monetary Policy Committee cited the International Monetary Fund's recent World Economic Outlook, which downgraded its global outlook projection to 2.8% in 2025 from 3.2% in 2024, and the World Bank's projection of subdued global growth for this year as the reasons for maintaining the rate.
Global headline inflation continued to moderate, but the pace of moderation remained slow. The IMF projected global inflation to average 4.3% in 2025, which is lower than the 5.8% recorded in 2024. This reflects the effects of monetary tightening and subdued global commodity prices.
According to Governor Saidy, global trade is likely to suffer further, with trade volumes projected by IMF to grow by only 1.7% in 2025, noting that financial conditions in advanced countries have eased, but low-income countries continue to struggle. Saidy also said the Gambia's economy is expected to maintain growth momentum in the year and over the medium term.
Central bank staff forecast the economy to grow by 6.5% in 2025, underpinned by improved business sentiment, public infrastructure development, tourism, financial services, and telecommunications.
Preliminary balance payment estimates, according to the governor, show an improved current account in the first quarter of 2025, but backed by tourism receipts, steady remittances, and lower electricity imports. The deficit, he added, decreased from $21.1 million in 2024 to $13.2 million in 2025, which amounts to 0.6% of the country's gross domestic product.
The deficit in the goods account narrowed from $297.1 million or 13.0% of GDP in the fourth quarter of 2024 to $248.1 million or 10.3% of GDP in the first quarter of 2025. The trade deficit continued to be driven by the importation of fuel, electricity, and food amid a low export base.
The dollar remains stable despite it depreciating against the US dollar from January to March 2025 by 1.7%, the British pound sterling by 0.2%, and CFA by 0.5%, whilst it's appreciating against euro by 1.2%. The bank also reported a slight decrease in government domestic debt.
The global economic outlook remained highly uncertain, posing significant challenges to policy implementation. The unprecedented rise in protectionist policies is stifling global trade and investment, as well as increasing cost of goods and services globally. For the Gambia, these global headwinds underscore the importance of maintaining prudent monetary policy and reinforcing financial stability frameworks to bolster economic resilience.
Governor Saidy said the Gambia's economy continues to register strong growth with positive medium-term outlook, but added global uncertainties call for sustained reform, reinforcement of fiscal prudence, and building of policies buffers to ensure resilience and safeguard macroeconomic stability. The committee has also decided to maintain required reserve ratio of commercial banks at 13%, interest rate on the standing deposit facility at 4%, and the interest rate on the standing lending facility at 18%. Reporting for GRTS News, I am Usman Saidy Khan.